You're tuned into the It's Real podcast with your hosts, Kayla and Andrew Yagi. Each week, we'll talk about what happens behind the scenes working full-time in real estate and share with you real-life stories, our successes and failures as we work to help consumers and industry professionals reach their real estate and real-life goals. Here we go.
Welcome to episode 61 of the It's Real podcast. I'm Kayla Calendar and I'm a mortgage lender.
And I'm Andrew Yagi and I'm a real estate agent.
Hi, Andy. How's it going?
Hey, I'm doing really good, Kayla. How are you?
Good. I'm enjoying this gloomy weather. It's kind of getting me in the holiday spirit.
Yeah, the fall has been really great. I mean, it's been great for farming. It's been great for outdoor activities. I look at all the time we've spent outside doing things, and even we're working on kind of a new construction build. We're diving a little bit more into taking a little bit more of an active role in real estate. So we've been building a spec home as well, and that's been coming really nice as well, which
awesome.
Would not have happened had it not been for the nice weather.
Yeah, no kidding. How far along is the spec home going?
We're at about day 51. We broke ground like the 23rd or so of September.
Sure.
And we are the house is really flying. We've got the yard has its final grade for the most part. We've got to touch up a little bit and get it seated, but windows and doors are in. Everything's pretty much 100% sided. There's just a little bit of miscellaneous siding around the garage door that needs to go on. Interior's all roughed in, needs insulation and everything beyond that. So it's been moving really quick.
Awesome. That's awesome. And then you're going to sell it. The plan is to sell it.
I think so. I think we're going to put it out on the market. The whole thing with this, we talk a lot about new construction, and you talk about, the fact that like in your marketplace in Fargo-Moorhead, there's so much new construction that you're helping people buy. In Fergus Falls, where I'm located, like there hasn't been any major new home development in 20 years, with the exception of a couple of builders doing twin homes and a random spec house here or there. So we need housing really bad. So we kind of said, hey, we're going to kind of put our money where our mouth is, and we're going to get to work on it. So this house has kind of been, I'll call it a science fair project, so to speak, where we're just kind of testing the market. We're testing the process, building relationships with contractors, and just kind of really excited to kind of, make something happen. And so far, so good.
That's awesome. Good for you. And what else is new in the Yagi household? How are the kids? How's singing a lot I see on Facebook?
The kids are doing good. We're pretty busy with some activities, growing involvement between basketball, skating, hockey, piano lessons. Always running a different direction every other day, but no, things are going great. So
I love that. That's great.
What is new with Kayla?
It's quieted down just like in terms of like the community, but then we see it starting to pick up as the holidays come. You're starting to see all these events, and we already have our bank holiday, customer appreciation next week. It's like already in November. We're getting ready to host Thanksgiving. And then in general, this time of year, I do a lot of business planning. I say, okay, it's notoriously quieter. I mean, you probably notice in real estate, this is usually a quieter time. It's not necessarily because of rates. It's necessarily because people don't want to move during the holidays. They're like, I want to focus on Christmas. I want to decorate. I don't want to be listing my home and dealing with that. Not everybody, but that's just the vibe you kind of get. And so at this time of year, I try to do more business planning to prepare for January and what's to come, because I have a feeling we'll have a busy 2025.
Yeah, I think you're right too. I mean, it's about as slow as it's ever been, in my experience in real estate, which is only 4 years. But, equally, we're kind of enjoying it. I mean, hey, we're still working hard to help our clients reach their goals. I do have especially some sellers that are getting pretty frustrated, just saying, hey, these people look at our house and they give us feedback and say, yeah, we're really interested. And then all of a sudden they're not offering. What's wrong with our house? Why doesn't anyone just make an offer? And, and I just have to tell people, hey, it's not you, it's them. And even more than that, it's the entire, market and the economy. And, last time, Kayla, when we shot a couple of weeks ago, we talked about the Wall Street Journal article, which I actually kind of threw it up on my website
Yeah.
as well, talking about all of the economic headwinds, how we're shaping up to have the worst year for housing sales since 1995. Talking about elevated mortgage rates, interest rate cuts, but actually, we know that mortgage rates went up about 1%. Just the election and everything, and now, thankfully, we're through the election, and
Mhm.
we're kind of through that cycle and moving on from there. So I think things are going to improve. Though interestingly enough, I had seen an article the other day, Kayla, that kind of talked about the fact that brokerages, agents, real estate agents are looking for rates to drop, and perhaps we can talk about this next time because we should have some more data out by then. But
Mhm.
consumers are actually thinking the opposite. And that just kind of looking at where things might head, that mortgage rates might actually go up.
Yeah, it's tough to tell. A year ago, we were saying, "Oh, we just need to get through 2023. It's going to be fine. 2024 is the year." And we are still seeing, especially in my world, lenders are barely hanging on. Those smaller companies are writing $50,000, $60,000 checks to their employees to, make it through. And what we're seeing is we've really held on in this industry thinking, okay, at some point we're going to feel relief. And last month we felt relief, Andy. We felt relief. We felt, well, I shouldn't say last month because it's November. In September, we felt relief. And then all of a sudden, consumer confidence changed because rates came back up. And as we talked about, just because the Fed cuts rates does not directly correlate to mortgage rates declining. And I think that's where consumers have just felt so confused. And they've kind of thrown their hands up and they said, you know what, I'm going to wait. And I think we as industry professionals really need to dive in as the experts and talk to our consumers and say, well, what rate are you hoping for and what's comfortable? And by waiting, what are you hoping for? Because if we can really gather that information and really understand our consumer, we can best help them to share. Maybe you should think about buying now because, Andy, right now, the people that are buying, I just got a purchase agreement, $7,200 in seller concessions, the
Wow.
ability to close when it works for them. There's just so many opportunities in this market, but I cannot blame a consumer for being nervous, scared, etc. And now that the election is over, you ask them, well, what are you hoping for with the election? They don't really know. It's just more of like well, let's just wait and see kind of mentality. So it's
Mhm.
been, I think I read an article yesterday that mortgage applications dropped about 10%, and I'm feeling it. I have meetings with clients, discussions with clients, consultations, but sometimes they're not even applying. Sometimes
Mhm.
I just approved someone this week and she said, I think I'm going to wait till next year. I just want to think on this, and that's really the trend I'm seeing.
Yep. Just say there's not a lot of consumer confidence. And again, I still, even looking at some of our past discussions, I think people are still pretty strapped, especially, looking at the debt load some individuals have and on the consumer
Yeah.
side. And of course, now going into the holiday season, we know that is not going to improve. So any forward momentum is going to make things challenging, which is going to challenge some individuals becoming homeowners in
Sure.
the new year. I came across a really interesting article um, the other day, and it was kind of based on a Fannie and Freddie report. Says there's never been a better time to invest in real estate. And basically, what it says is like back in 2006, Kayla, there were about 10 renters per house.
Mm.
2008 recession caused home builders to slow down and banks to tighten lending requirements, decreasing the supply of available homes. In fact, I was talking with a professional yesterday who they're looking at possibly relocating to the area, and I was giving him a tour of our area, and he had referred to the 90s as the roaring 90s as far as housing,
Mhm.
just because it's like, hey, we're considering a move here from across the country, and it's not any different here than anywhere. There just are not a lot of homes. Well, what this article talks about, Kayla, is talking about the rental piece. So there were 10 renters per house in '06. Now today there are 30 renters
Mm.
per available home. And just talking about landlords have been able to get really, really good rents. And really be selective with student or with clients or tenants that have strong credit and stable jobs. So that's really very telling as well for the
Yeah.
market.
Yeah, I think if you're able to be a landlord right now, you're going to have a lot of these people, again, with consumer confidence being probably at an ultimate low. You're going to have more people that are willing to rent and see it through or get in a lease. And I
Mhm.
mean, everyone I talk to, it's like they're in some type of lease. Very rarely are my people, could be different in other cities and states. Very rarely are they month to month. It's usually like a 6 month contract. But when I think of that, when you shared that with me earlier, I'm like, yeah, that now more than ever, it's probably a great time to be a landlord because you've got this pool of people that are wanting to rent for now.
Mhm. Well, that makes me even think, as we're kind of embarking on this new construction build, really with the goal of doing more and really growing and trying to make an impact locally. But we do see such a need for rentals, and even there are some professionals that come to our area, and they're like, wow, like the rental market, like nothing here is really up to par. So we've really kind of been looking at that. In fact, I did just find, you'll have to excuse, the photo doesn't look great, but here's a photo of our new build, kind of the poly
Awesome.
over the door still. And so it's going to be pretty simple vinyl siding with kind of a
Yeah,
black and white, theme to it.
love
And
it.
the inside the floor plan is going to be really, really pretty nice, and actually have more room than most people's homes do on the main level. But
How many square feet is that, Andy?
1350.
1350. Awesome. And
So
it's
most homes, if you think about it, I don't know what your main floor footprint when you guys built was, but 1,200 square feet is kind of on the upper end or the average
hmm,
of
crazy.
what a main floor footprint would be. So
Yeah.
yeah,
I think we're at like, I want to say 1800 is our main floor.
okay,
And it's for two people and four dogs. It's great. But, now but we expanded ours when we built. Our realtor said, expand if you can, like make things a little bigger if you can. Rates were also at 2.75 then. So adding on wasn't as much. But I mean, nowadays we're seeing new builds go up, Andy, super small square footage. It's really being customized for a first time home buyer because a lot of people are able to get into homes in Fargo for cheaper, get a
right.
tax abatement. Insurance not isn't necessarily as cheap as it used to be, but I remember seeing insurance premiums coming in for like $800 a year. But we're seeing a lot of like my first time buyers, a lot of them are looking at new construction in Fargo. So it's not out of the question to see a smaller new build. I mean, people like that newness, that modern, first person living in the property feel.
They do. I was visiting. I've got a development listed, and the individuals that are kind of developing it, they're working on a plan, kind of a Shells barn dominium with Epic Homes in Fargo. Are you familiar with them at all?
Yeah.
They do really, really custom work, and I mean, pretty much everything they do. I mean, I'm very, very
Beautiful.
impressed. It's unique, one of a kind, kind of a masterpiece. So it's been kind of fun, visiting with Tyler, and some of the crew there, just kind of seeing what they can do. So a
Mhm.
lot, a lot of excitement out there. So there are people doing things,
Yeah.
even though a lot of people aren't. And I want to get to talking about, now post election, where are we at? What do we expect? But first, Kayla, what have rates been up to?
Mm, rates kind of creeped up a little bit. The 30-year average as of, the time that we're filming this is about 7%, 7.02. So we've seen them rise up a bit. In the last, month and a half, we've seen them continually rise, which again, as we talked about, hasn't been great for consumer confidence. But we also saw our bond programs in North Dakota increase a little bit. I just let's see, for example, let's just use that second line, first home start. 6.15 for FHA, for example, for no cost. Um, about a month ago, I was in the fives for that. So we have to be very upfront with our clients like, hey, if you are purchasing, and we talked 30 days ago, and you're looking at a $250,000 house, it's going to cost a little bit more. So we're seeing them inch up. But with the CPI coming out, we'll see what happens with rates. There's some discussions about what's going to happen when that comes out, and if that will have any impact on rates. Again, it's not that just one thing impacts mortgage rates, but hopefully we see some relief with that CPI report, which reflects inflation, and we'll see. Maybe we'll see rates plummet in December. Maybe, as you said, Andy, we'll see them increase. It's like once we feel like we know what's going to happen, It's like, just kidding. We're not really sure. But as I'm telling my clients, if you like it, lock it. I had 4 people that were floating since about end of September, and they floated, rolled the dice, floated, rolled the dice. And I had one client at 6.125 on their refi. We locked them in finally at 7. We had to lock, it's a divorce situation. We had to get it done. But by rolling the dice, he lost out. But I think a lot of individuals are seeing this as, maybe this is like a 6-month loan. Maybe this is like a 12-month loan, and I'm only going to have that 7% for a while. So we really don't know. It costs money to do a refi, title work, potential appraisal, recording. But we're seeing them come up a bit, and I'm very curious to see what the rest of the year is going to bring. And we'll, of course, report that here.
For sure. Well, and I look at, we talked just a little bit ago about rental properties and a great time to invest, just with, 30 renters per house. And I have had a number of individuals reaching out, and we've looked at some properties because there are some people that have been in the game and maybe want to get back into the rental game, or maybe they're thinking about it as part of a strategy. I would say most people, when the rubber meets the road, don't have, I don't want to say the stomach for it, but just really, like, there are probably better investments out there for them, just with, some of the dynamics that go along with it. But yeah, it can be really good as well. But yeah, it will be interesting. But speaking of interesting, so Donald Trump going back to the White House, and talk about a decisive victory. I mean, and just really for the Republican Party, and just, I think it goes to show just all of the misinformation from the mainstream media. Just because, again, everyone predicting, and I'm not even talking partisan politics. I'm just talking about what was reported in terms of, hey, this race is so tight. This is so tight. Not only that, but the Harris Walz campaign had $1 billion in campaign donations, and then to see just to see how decisive it was. I mean, just unbelievable.
It was a red wave for sure. And my question, I won't get political, but when we look back at the 2020 election, where were those 20 million votes that occurred in 2020? And so to me, like, I'm always just very aware and trying to keep up with, like, what's going on, because mainstream media is not a thing anymore. I feel like we're getting our information from podcasts, from the people that we look up to and respect, from the Gary V's of the world to the Joe Rogans to whoever it is. And now more than ever, it's like, what is the truth? And I think just seeing the results of the election, it was like, wow, like, I didn't expect that. But
I've got to throw this in really quick, because I saw it. I was kind of mindlessly scrolling through TikTok just a little bit earlier, and I feel like you would like this, and this is a shirt I think I'm going to get for you, Kayla. Trump, better coverage than 5G. Can you hear us now?
See, I was hoping for the Daddy's Home for Christmas sweatshirt.
but seriously, so looking at that map, so that is, I mean, that's unbelievable. Just kind of looking at that division. But anyway, we're not really here to talk politics, though we are here, to kind of talk about, where do we go from here? As far as, and what can we expect in the market. So I kind of like this article, Kayla, by Bigger Pockets, which I'm a huge Bigger Pockets fan. They basically focus on real estate investment, but again, coming on the heels of the Fed cutting rates another 0.25% here just a handful of days ago, and what comes back. And so really just the biggest takeaway. So again, although the Fed cut rates, mortgage rates are high due to broader economic pressure and post-election uncertainties. So this, again, really, obviously some real estate investors have seen a little reprieve, just because, again, usually if you're going to go borrow money for a rental property, that rate is tied to the prime rate with most lenders, most individuals, unless they're house hacking, aren't using a traditional mortgage like you offer. So again, Kayla talks as well about policy changes coming out of the new Trump administration. We'll have to wait and see how those, especially reduced regulation, are going to impact the market. And in today's climate, properties with strong cash flow, again, tying back into the investor piece, offer the most stability. So again, instead of banking on future rate cuts, target investments that perform well. And so, we know right now that, again, this talking a little bit more from the investment standpoint, but that, cash flow is a huge thing for people who are going out, because there are a lot of properties that aren't cash flowing,
Yeah.
meaning that if people want it to make sense, they've got to put a little bit more down in the form of a down payment. If they want a property to work out. And so right now, shifting away from the investment piece, for the consumers out there looking, and just kind of wondering where are things going. Again, we've seen a lot of division. Where are rates going to go? A lot of consumers thinking that rates are going to trend upward. A lot of mortgage brokers and real estate agents thinking that rates are going to come down, or maybe they're just hoping and praying.
Yeah.
What do you think?
I feel like we will see, I feel like a steady pace through the end of the year. And as we get into 2025, we will see more relief. I feel like by spring of 2025, we should be able to say, hey, we're feeling good. There's, again, in this area, spring happens to be a time where people are listing their homes and where there's more inventory. I feel like it will be a really great, perfect storm of it's warming up, people feel confident, rates have come down, but I feel like it's going to be a slow burn. I don't think we're going to see rates just magically get better overnight. But I think that if people are serious about home ownership, it's more than just the rate. A lot of people might have to relocate. Maybe they want to get out of an apartment situation. And I had a client that had mold in their apartment. They close next Friday, thank goodness. It's like it's more than just the rate and the payment. It's about like what they want and they need. It's their safe haven. And when we really, as experts, get into those conversations with clients and we ask, what's your motivating factor? What are your fears? What are your hopes? And people talk about having a space, a safe place for their family in a neighborhood, and their neighbors are terrible and they've got dogs in an apartment. Like it's so much more than that. And I feel like consumers are getting to that point where they're like accepting of the rate, accepting of it. And as they kind of get past that a little bit, this slow trickle down of rates that I feel we'll see will just be a cherry on top. But I will say, back to the Fed cutting rates for like that prime rate, when the Fed cuts the prime rate and we're at 8.5 on your clock, and now you're at 7.75, that frees up cash flow for you to afford the house that you want. So even if mortgage rates are not completely coming down, your rates on other things are changing, which allows more cash flow. So either way, the consumer's winning if mortgage rates are not directly impacted by Fed cuts.
Right on. Yeah, it's going to be interesting, to kind of see. And so I'm going to look forward to the CPI index report, and then we'll probably have to pull up some of the MBA forecasts as well.
Yeah. We'll have that on our next episode: MBA forecast, CPI results, and share what this means and what this could mean for even rates in November, but also the rest of the year.
Right. I think so. The other interesting takeaway from this article, Kayla just talked about the fact that, home ownership may be very tough for new buyers. The housing market, I think, is going to be better next year, but I think it's going to be a little bit volatile, especially, looking at some of the bond yields, looking at, potentially some of the legislation coming out that, may, or Trump administration may favor, more higher income earners. However, on the flip side, we know that more than likely we're going to see less regulation, which means it could make it easier to get a loan. It's going to make it probably easier, Kayla, for you to do your job as well. But we know affordability is at an all-time low today, which is making it more challenging. And I came across kind of another post kind of talking about the median age of U.S. home buyers. And so the first-time home buyer, that median age went up to about 38 or something. All buyers, the age was up to about 57, and you take jump back to around 08, it was like 38. Repeat home buyers, the average age is about 60. And it also, I found yet another article that kind of corroborates this, talking about Americans who bought homes were older and richer than ever. Are you seeing that as well?
I'm seeing it all over the board, but I will say the average age has increased. I helped helping a 21-year-old buy a home right now. And to me, I'm like, that's incredible, starting so young. But I'm also seeing first-time home buyers, couples. I'm helping a client in Nebraska right now. They're living with their parents and they're in their mid-30s. Like we are seeing such a shift, but I think the affordability factor's just been such an issue. And people are okay living with their parents to save, but I think it's just gone on longer than people have hoped. They've been like,
Yeah.
well, let's put it on the credit card. It'll be fine in a year. Let's live with mom and dad. It will be out in
Yeah.
6 months. And we're just seeing this drag on. And I think people are getting a little worked up, or they're over it and they're like, I'm finally gonna buy, or they're throwing their hands up and saying, I'm just gonna rent. So
Yeah.
I'm seeing it across the board, but I have seen that average age increase. How about you? Have you seen that too?
I would say so. Um, it's challenging in our area too, and probably skewed just because we're in the lakes country. So we do
Yeah.
a lot of lakeshore as well. So generally, that's going to be an older consumer. But I have where you talk about, it's going to be better in a year. I'm going to live with mom and dad. I mean, I've had some people that said, "Hey, we're looking for a rental property. We need to get back to town. We're going to be here just a couple of months, and then we're buying." And that was 2 years ago. So kind of the
Yeah.
same thing as well. So I think brighter days are ahead, Kayla, and I would tell everyone out there watching or listening exactly what I tell, my buyers and sellers is just, stay the course. Like if you need to make a move now, like, yeah, it may be a good time. I mean, is it the best time, depending on some of these factors? That depends. I mean, if there's some life event that's happening, or you're going to get closer to family, or you're taking a new job, come in, let's talk. Let's talk
Yeah.
about how we can help you reach your goals, get some concessions, get into a property at a lesser price you can refi later. If you have to sell, we're probably going to have to price a little bit more ahead of the market, and your house might not sell this year. And it's not necessarily that your agent isn't out there working,
Right.
isn't doing a good job, that your lender's not getting you the best terms, best rate, best closing costs. It's just kind of a reality of a very challenging market. So reach out. Would love to visit and kind of help you put a plan in place, and help you, find a plan that works.
Well, and I always say, you're probably sick of me saying this, but you get it. Prescription without diagnosis is malpractice. And whenever I sit down with a client and have a 20 to 30-minute call, they don't even have to apply. It's just a conversation. After every call, almost, Andy, I feel like the individual just has this like lift and excitement because they feel like they can't be approved. They feel like they shouldn't buy. But as we empower and educate the consumer, here's what you could gain in appreciation. Here's what you could gain in equity. Here are the tax benefits. Here's the peace of mind. It's up to you now to decide. I mean, I will never tell someone you should buy now or you shouldn't buy now, but I will give you my essentially my advice on what you could do with your funds, what you could do with your living situation. And when you educate and empower the client, every client I talk to, like I said, they just have this like, oh, I didn't know mainstream media saying rates are high and I shouldn't buy. But when you talk to someone locally and you have the conversation, at least your options. So,
Mhm. Without a doubt.
mhm.
Well, Kayla, a lot of great options still out there, even though we're in kind of some challenging times, but kind of some
Yeah.
exciting times. Will be interesting, with a new administration, and just to kind of see, kind of what happens in the new year. I'm excited. There's a lot of positive out there.
I think 2025 will be a good year. And at the end of the day, if we do see realtors and lenders leave the business, it
If
does allow, if when, I think we'll see some more people
Yeah.
drop out this year. I think you'll have to tell me, in Minnesota for realtors, do you guys have to pay in a lump sum when you renew?
Yep. So renewals are just, so for most of the MLSs, they're due like right about now.
Okay.
So it's going to be really interesting because,
Yeah.
again, a lot of people have been hanging out just because I mean, they pay their monthly fees, but
Yeah.
now to have to pay roughly $1,000 at year
Oh
end,
my goodness.
a lot of people just don't have that. I've even heard from a lot of very experienced agents like, wow, this year is the worst I've had. I'm living on ramen. It's not great. And so again, it shows, especially now, align yourself. And especially, there are a lot of people. I saw actually an email from a brokerage recruiter come through the other day, and she was just
Mhm.
talking about how she had seen, 5 different individuals she knows they're talking about selling next year. And how are they going to find who they're going to work with, whether it's an agent to list with, an agent to buy their next property, or a lender? Well, a lot of people are going to get referrals, or they're going to go, they know someone, cousin Susie's husband's son is a real estate agent somewhere. So we're going to go work with them. But ultimately, more than ever, it
Mhm.
really makes sense to align yourself with someone who really knows the market, who's actually out there doing business, and who's in it for the long haul, because there are a lot of part-time real estate agents, especially, and also lenders. So set yourself up for success,
Mhm.
and work with someone who knows the market.
It's at the end of the day, it's your biggest purchase you'll probably ever make. And I wouldn't want to go in front of a judge with an attorney that kind of practices sort of a little bit. I would
Mhm.
want the best one to represent me. And so, as people, like you said, Andy, go into the new year and wanting to align yourself with the right people who've got your back and will fight for you. I always tell my clients, the realtor that you hire or sign with, they're not just there to find you the house. There's so much more that happens after that. And that's when you see the true expert in a real estate professional. I know I sure do when I'm on my end. And those individuals, like when those clients hire those realtors, man, oh man, am I glad that they got the expert. So align yourself with those people, look up Google reviews, talk to other people, but find someone that's experienced and going to just essentially hold your hand the whole way through.
Amen. Well, Kayla, that I think we've kind of run the gamut and covered a lot of great information. So great catching up and
Oh,
great
it's a
visiting
pleasure.
about the market, and we'll look forward to doing it more. So I hope you have a great rest of the week.
I will if you will. We'll see you, Andy.
See ya.
Bye.